If you've been paying attention to real estate headlines lately, you've probably been hearing a lot of noise. Mortgage rates, federal rate cuts, investors waiting on the sidelines. And a lot of people are wondering if now is the right time to buy, sell, or even invest. Well, today's episode is going to be about cutting through that noise with facts, strategy, and real world perspective, especially as we head into Florida's most active season of the year. Welcome to Living the Florida Lifestyle. Welcome back to Living the Florida Lifestyle. Today's episode is going to be cutting through that noise with facts, strategy, and a real world perspective, especially as we head into Florida's most active season of the year. I'm Michael Baker with the Baker Global Team with RE/MAX Alliance Group here in beautiful Bradenton, Sarasota, Florida. On this show, we're going to break down what's actually happening in the Florida real estate market using data, experience, and local insight. So buyers, sellers, and investors, you can all make smarter decisions. In this episode, we're talking about mortgage rates, what the Fed going to do, and of end-of-year planning, and why winter is not a slowdown season here in Florida. We're also going to dive into investor activity, second home financing, and what buyers should realistically expect as we head into 2026. Joining me today is someone who lives on the front lines. He is the mortgage expert that I know, Scott Taylor with Hall of Fame Mortgage. He's out of Indianapolis, Indiana. Scott works with buyers and investors across the country, including a growing number who are purchasing and investing right here in Florida. He's bringing a clear numbers-driven approach to lending and a deep understanding of how interest rates, loan products, and market timing impact real people and not just headlines. Scott, I really appreciate you joining us today. With everything happening right now, rates, inflation, and buyer hesitation, this is a conversation that people truly need to hear. So let's start with that big picture. From where you sit today, what does the mortgage market actually look like as we close out the year and going into 2026?
Hi, Mike. Thanks for having me. I appreciate you, man. You and I have a long history, and I love hanging out with you. So I appreciate you inviting me on here. Well, as you know, just this past week on Wednesday, the Fed dropped another quarter point on their rate. So let's first talk about that a little bit, because that's when I get a lot of calls from buyers when the Fed rate, and they start talking about, well, the Fed rate went down. That means mortgages are going down, right? Not so much. Actually, pretty much the last few rate drops that we have from the Fed has caused and affected a higher mortgage rate, actually. And so people don't understand, well, wait, I just saw on TV, they just dropped the Fed rate. Well, Fed rate really kind of hunkers in on savings accounts, interest rates on credit cards, short-term type loans. And so you see some immediate drops in those. It does not affect the mortgage market hardly at all. In fact, it usually takes a couple of months to be able to see that the mortgage market kind of reacts to it. In fact, what they'll do is when the lenders start to see that it looks like it's going to be imminent that a Fed rate's going to happen, they'll go ahead and drop rates and bake it into the rate of what's happening right now. So a Fed rate drop does not equal a mortgage rate drop. We're still sitting in the low sixes right now, Mike, on purchase, which are still pretty good. A first-time home buyer, I'm seeing some really good rates on FH right now, and VA we're below 5.5 on some of those, which is
Great.
really a nice rate. And of course, that all depends on credit and things like that too. You know, everybody wants to have a 780 to 800 credit score, and which gets you the best rate. But if you're a 680 and you want something, you're not going to get quite the rate that everybody else who's got a higher credit score has. So people have to remember that credit report means a lot. So I try to coach my people up on that quite a bit and get them to be prepared for when you're getting ready to buy. I think there's a big difference between a home buyer and a successful home buyer. And we can go into things about that too, but there's a big difference between the two.
So you're telling me that there's not just a book that you pull off the shelf said this is the rate for everybody?
No, far from it. And that's pretty good, Mike. I actually kind of like that one. It would sure make my life a lot easier if it was, but no, it is not anywhere near that way. You mentioned investors, a non-QM loan, which is an investor loan, a DSCR loan, things like that, which are built for investors. Those don't come at the rates that a first-time home buyer or a regular Govy type loan VA, FHA, USDA loans. Those all come with the government backing. Conventionals obviously a little higher than those, and then the investor loans tend to go up a little bit more on that. But I also find, Mike, that investors aren't as concerned about interest rate as they are about cash flows. They're looking, can my principal and interest that I'm paying for this house, can I get more in rent? And pretty much, if they get more in rent, then they're good when it comes to investing, because they'll make a lot of the money on the appreciation of the home, which is still going to continue to go up. I think your side of the coin now has to start getting in line a little bit, and there needs to be some price adjustments. And we're starting to see that. We're seeing right now 65 to 70% of the homes are having a price reduction within the first 30 days
Oh
in
yeah,
a lot of markets. And I think where you're at, and I know how you work, you try to price it right the first time for a quick sale. That's important. A good real estate agent will do that. A person who's not quite as versed on what home prices should be will put a seller into a situation where they'll have them believe that we're still pre-COVID and that the house is worth a lot more than what it really truly is in today's current market.
that's kind of where we work with all of our sellers, is that we're we're not necessarily only competing to find a buyer in our market. We're competing to find buyers. I mean, because we are a destination location from New York, New Jersey, Pennsylvania, Indiana, the Midwest. People come to Florida, so we advertise in all those places. But we also have to be able to price the house to get the eyeballs on it. If you price it too high and it sits on the market too low, all of a sudden it's piled on because so many homes are on the market that, you know what, you get lost in the shuffle. And that's what we pride ourselves on, is pricing them correctly to get the eyeballs on them, so that we don't have to worry about how long it sits.
Yep.
Fortunately, we also have to worry about the new constructions that are right around the corner of a lot of these communities. So that gives us another battle, and we actually talked about that last time, which was had a lot of comments about that, and that's one of the things where we sell the retail, we also sell the new homes, and I know that's an area that you guys as mortgage people, the new construction people, they got a handicap you a little bit because they control the bank. Is that a problem? How do you combat that? How can you work with somebody who's working on it and buying in a new construction?
Sometimes you can't, Mike. Sometimes you just have to punt. There are so many homes being built still right now that those builders have to offer incentives to be able to get them off the market. If you're
Right.
not, then we're sitting on a glut of new homes that are not moving. So obviously, that's a situation. It's funny though. You mentioned that. I find that there's a strategy out there that nobody takes advantage of, and I think it's kind of funny. And it's birthed out of new home building and where they're offering incentives. I find that people are willing to drop their price rather quickly. If they really do the research and they're working with a good mortgage professional, that a seller actually can benefit from a mortgage professional because they
Absolutely.
can use the same type of strategy that a home builder is using to drop the rate to get you down in some cases I've seen some high fours out there. And it literally just suddenly becomes a situation with, let's say you're a guy that's got a nice home and you're sitting on a $500,000 home, Mike. You can offer a permanent rate to a buyer as a seller. And I don't see people taking advantage of that. And it costs significantly less, like half of dropping a price 20. And people don't think twice about dropping a house $20,000, $30,000 off of a half. But if you do it right and you say, okay, instead, how about we do this and we'll get you a rate in the low fives instead of the sixes that you're looking at, you'll save them money. You can actually also show them how you can save them length on the contract. And more importantly, you're going to get them a better price for what they're buying. I mean, you're going to get them in a lower payment. And I think people are more concerned today about payment than they are about pricing. They really are. So if you're battling that with a permanent buy down that any good mortgage professional could show you, it makes a lot of sense to explore that if you're a seller out there.
Well, absolutely. And that's kind of when I talk about what we do, is it's all about marketing. It's being able to get the house priced properly and then marketed properly. As I talk to people, to talk to our sellers, they've got, in our some neighborhoods, you might have 8, 10 homes for sale out of 100. You got to be able to get those where you stand out, and offering buy downs on rates, offering concessions to be able to get that buyer in there, just like what the new home construction people are doing. Exactly. That's why I wanted to bring you on to talk about. Hey, I could throw the ideas out there all day long, but talking with a professional, you get that point across. That's why we work with guys like you all the time, and that's why we like having you around.
Thanks, man.
Absolutely. Now, one of the things I want to talk about, we could talk interest rates. Let's talk 2026 a little bit, if you don't mind. I know the Fed cut rates this week, and we've had this conversation on previous episodes. When the Fed cuts rates, generally we've actually seen, as you said, a bump up. It's based on the 10-year bond. That's pretty much what they're basing the mortgage rates on.
Yes. So if you look at the 10-year treasury and you're seeing it at like, I'm sorry, I'm down here in Florida near you where I'm doing a little vacationing right now. I haven't looked at what the rate is, but a couple of days ago, I noticed it was at like 4.16, I think.
Yeah.
Oh,
I think I saw
generally,
4.19 today.
okay, so it's gone up again. So basically, that is the rate that you're talking about where banks are borrowing money from each other in a lot of cases, okay, in the 10 years. So what you do when you're looking at that, if on average, just as a rule of thumb, say, if you add somewhere around 2 to 2.5 to that 10-year treasury, you'll be pretty darn close, Mike, on what the going mortgage rates are for 30 years for that day. So the spread goes anywhere from, I think the last time I actually looked at the spread, it was like 2.38, I think it was what it was. And it was
Okay.
so, but you could tell pretty much what mortgage rates are going to be by adding, you know, 2 to 2.25, maybe points to the 10-year treasury.
I've always thought it was 250 basis points is kind of the number I've always played off of. I figured if I think 250 basis points, I'm not going to be surprised by a number higher than that.
Yeah, yeah. So I look at things that way a little bit. I try to watch the rates. I mean, when I'm in the office and I'm every day, I've got a computer screen basically devoted to what the interest rates are and what the treasury bonds are doing. And there's some really sharp people out there that can kind of predict and based on trends of what's happening and what's coming. And I think that's where you're headed with this conversation towards what's going to happen in 26. I would tell, I don't have a crystal ball, but if I did, I would tell you that you'll see way less drops in Fed rate next year. I don't think they're taking enough of the jobs market into play on it as I should. They all of a sudden think the jobs market's fine, but it always comes out. Wait, they'll give you a jobs number, gains or losses, and then the adjustment comes like 30 to 45 days later. Oops, we got that wrong. And they get it wrong pretty much every time. Oh,
Oh yeah.
I think there's a purpose behind that. I think it's to not create shock in the real estate market because that's directly what's affecting a lot of rates sometimes. I get to it's nine of the voting governors right now are saying one, maybe two, and 11 right now are saying no changes in mortgage rates for 26. So I think if you're going to buy, if you're waiting to buy right now, um, you might have to get a little creative about with permanent buy downs and things like that to get a rate to where you want to. You're gonna have to invest in that upfront. But I think Mike, I think where we're at is where we're going to be for the majority of 26. I just don't see if you're waiting for a mid five, you better do it in the buy down because it's not coming. Not
Well,
now.
one of the things I wanted to kind of talk about with you because I get a lot of conversations going on with other people, and they talk about trying to time the market, time the interest rates. What would you best advice be to someone who says, "I want to be able to go under contract, but I want to hold off on locking in a rate because I want to time that rate, that timing perfectly."
Bad decision making. Here's what I'll tell you. The amount of money that changes on what an interest rate lock would be at versus waiting to buy at the right time and watch the appreciation of the house go up is a real balance.
Mhm.
I would rather buy the house. I think look, in the last 75 years, do you know how many years that the market went down in rates where they lost money? Actually, 7. And of those 7, 6 of them were at 0.1. Okay. The '08 crash did a number on a lot of people. But Mike, seriously, I mean, if you find the house you want, go buy it, go get it, and let the interest rate fall where because the money is made and the time is saved on the refinance. You take advantage of the market of where it is at that time because it will go down, it will go up, it will go down. But the only thing that's going to change, none, and is going to be consistent, is the fact that home prices are going to continue to appreciate. It's what home prices do. So you can't control that as much as you control a reaction to the market. So if you buy a house, get it when you can, get it when you're ready, and buy the house. And then let that professional who's in the mortgage business guide you and coach you through ways. I mean, I've got a guy on track right now. We did a 30-year note on a house. It's his first home buying experience. Got an FHA loan, and I've got him on track right now to pay that 30-year note off in 9 years. So any mortgage professional worth their weight in gold is going to try to help you. And if they're not, then call me and I'll show you how it works. It's
That
why I
kind
got
of
in the
brings,
mortgage business, Mike. I mean,
yeah,
this is
well,
this right here is why I got in the mortgage business.
right.
We when I moved to Indianapolis to be with my wife, she was sitting on a 30-year note at 6% that she had paid down for 7 years. Well, now you got extra income in the house. So what we do, we paid it off early. And there are many different ways and many different strategies to extra money your way into paying that thing off early. We paid ours off in 9 years, 8 years. We paid ours off in,
Perfect.
and she had 23 years left before. So this is the reason. This is my why. Everybody's got to have a why for something, Mike. My why is the education piece of showing people how they can make adjustments and sock away money to be able to get a mortgage out of the way quickly. And then once you do that, now your retirement options become way, way different. Maybe you start buying second and third homes, or you become an investor and you get down. I mean, at the end of the game, for me, it's not about having $3 or $4 million in the bank and then living off of that. It's about cash flow. How much cash flow am I generating? Which is why I've also become an investor as well.
Absolutely. Now, talking about that, because there's two angles that hit me while we were talking about that. Listening, you pay off the house early. You can now utilize that equity in that house to go buy investment properties. That helps. Number one. Number two, there's a lot of new home buyers, and we talked about this last episode. There's first time home buyers. There's for programs for first time home buyers for down payment assistance. There's all sorts of things that are out there. Lower interest rates, lower mortgage properties. But they also they talked about this 50-year mortgage thing. Now, my question to you is, I have an opinion on it that it's not for everybody, but there might be a small smidgen of people that it might help. But I know for a fact that you have an opinion about the 50-year mortgage.
Yeah. Yeah, it's not good. It's not a good one either. I don't like, well, but see, and I know where you're going with this, and I get it. There are some people, I mean, average age of a first time home buyer right now is 42 years old, Mike. Didn't used to be that way. So they're sitting and they're spending all this money in rent, making somebody else's dreams come true instead of making their own dreams come true. So if it comes to that, okay, if it lowers the payment enough to do it, I could get on board a little bit. I just think you have to be able to attack it aggressively. The only way that I like a 50-year mortgage, the only way, is with somebody who is an investor and they want to keep their principal and interest payments as low as they possibly can in order to make the arbitrage, make the money off of what they're renting the property for. And if they create that spread, and there are a lot of products out there. I use a lot of products like 40 years with 10 years interest only. So it doesn't go backwards. It just pays off the interest and the principal stays the same, which is a great strategy if you're an investor that you're in a home that you know you're only going to keep for those 10 years, and you might trade up and do an exchange, 1031 exchange, and move into something else. There are places for those kind of things. I just don't think you'll ever convince me it's for a first time home buyer.
Okay. No, I get that. I mean, and that's kind of the conversation that I've talked with other people. It's that person who has a plan, that knows what they're doing. They've got we have so many people in Florida that move in here, and the average the time they're staying in the house is 5 to 7 years. And then we've got that second wave of people that come down here and that retire here and they move into a house. They're not ever leaving until they drag them out. So there's a certain percentage. Like I said, it's not for everyone, but there might be that one little group of people that, you know what, they want to be in a house. They don't want to spend all their money. They don't mind having a little bit longer payment because, hey, they can throw a couple extra bucks every month in it to drop down the principal, and they're happy as clams.
Yeah. Yeah. I'm a big fan of paying off early. I just am.
Absolutely.
I think that 70% of a mortgage professional's job happens after you've bought the house
Yeah.
in my world. Because I think the educational piece to this of showing them how to be a smart homeowner and a successful homeowner versus just being a homeowner. So that's, you know, 10% in the process, 20% at closing, and the other 70% of this is all how do you manage it and how do you get your client to be successful by achieving certain things and paying things off early. It's 70% of the job is after the sale for me.
Absolutely. And working with us as the Baker Global team, I mean, Thanksgiving, I delivered 50 apple pies. So we never let our people go. I mean, we consider it family. So that's kind of, I never believe that once this, just because we close on the house doesn't mean we're done talking. And that's one of the things I really appreciate what we do with this in this industry. We get to keep helping people, whether it's them, it could be their kids, it could be anybody in their family. So that's what I love about the industry as a whole.
Yep, agreed.
So one of the things I want to talk about is, guess what month we're in? We're in December, end of the year, quarter four. It's been a crazy last 18 months in the market, especially down here in Florida. We may or may not have had some storms in 2024. I think we've tried to all forget them, which is good. We got through hurricane season this year without anything hitting. What would you do as for somebody who's thinking about buying a home sometime in 2026? Now that we're middle of December, moving into the end of the year, what's the best way to plan for and get prepared for buying before they get even to working with me, get set up with you first?
Well, first of all, let me just say that I hate FICO scores. I do. I just do. I mean, I don't think it's a true representation always of a complete financial picture for a buyer. I just don't. But we have to have something, and that's what we have. I don't think that enough people understand where they need to be. But let's talk about the mortgage business, and it'll kind of give you. So if you're an FHA or a VA type buyer, if you're under 580, and 580 is a stretch, by the way. 620 is the normal number where you need to be before it, and then it depends on your debt to income ratio. But 580 can get you home on some governmental loans if you don't show a propensity for being late on your payments. I think too many people in the world are overextended, and I have data to share that will kind of back that up.
Please.
If you're a smart home buyer and you are wanting to refinance so that you have more cash to piss away, you're refinancing for the wrong reason. You just are doing it in order to better your financial situation. And I'm not talking about spending money. I'm talking about exiting early. If you're not using it to leverage it to pay off everything you can early, if your idea of living life is to live leveraged to the hilt in debt, I probably don't want you as a client. And I don't think not just me, but there's a lot of people out there that don't want you as a client. And they're out there, Mike, and they're everywhere. I just want people to be open-minded enough to understand that there's a different way of doing it. And I think everybody wants to be debt-free, but I also think people are ignorant about the facts of what it takes to get debt free. And that's why people like us, when we're talking about what could honestly be the biggest investment of one person's life, I mean, what, 70%, 75% of the people, this will be the biggest investment they ever make is a home,
Absolutely.
probably. So if we're not educating them into how to make themselves wealthy and be financially savvy about things, because I got news for you. If you're 30 years old and you're buying a home for the first time and you plan on living on Social Security at the end, I'll buy you a beer and tell you many, many reasons about why it's not even going to be here at
Well, I
the end. It may
remember
not
when I
even be here to the end of my lifetime,
Well, I remember
honestly.
when I was into my 30s and I was thinking about what I was gonna do. I mean, unfortunately, I'm no longer in my 30s. I know I look it, but I know it's crazy. But I didn't think that Social Security was gonna be around even for me. And, back when we were talking with Raymond James as an investor, when I was talking with people that way. So, yeah. The one comment I wanna bring up about that is I saw a stat, I think it was this week. What are we, $1.5 trillion dollars in credit card debt?
Oh, we're over 2 trillion now.
Is it 2 trillion?
Yeah. Yeah.
Yeah. That's a problem in our society. That's the problem we've got. That's why people. I mean, robbing Peter to pay Paul. I mean, all these sayings come around for a reason. I mean, trying to keep up with the Joneses. I mean, what your neighbors are doing. That's the problem. That's what happened in 2008 with people. They were taking money of their homes and buying boats and wild vacations, thinking the house was going to keep escalating in value. We saw what it can do in '08. '06 to '08, we saw what that market did. I don't
Yep.
think we're gonna see that because we had a lot of people who bought between 15 and 21, and they've got a lot of equity. When I talk with a lot of people are saying, well, the foreclosures are going through the roof. We're going from 0.1% to 0.3%. We're not seeing especially down here in Florida, we have a lot of people that are maybe behind with some of their payments on stuff, but they're not losing their homes because they've got equity that they can pay everything off. They can get out of their problems. Whereas back in '08, that market crashed, their houses dropped in value, and they're stuck. That's why the short sale business was such a huge market. So that's why
Yeah.
we got to keep people from. I talk to people every day. They come to me and they go, "Hey, I want to buy a house," and we get them approvals. Or I say, "Hey, have you been pre-approved?" Yeah, the guy said I can buy a $500,000 house, and then we come back later and they go, "Oh, we didn't check your credit real hard. We looked at your income,
My
and all of a
biggest
sudden
my
now we got
biggest
a
pet
credit card."
peeve my biggest pet peeve. I don't believe in pre-approval. I like pre-underwriting people.
Yes.
I think it's the most important thing because if you're getting something from my company and it tells them that, hey, you can buy this $360,000 house, it's because you can. There's all the little disclaimers on the pre-approval that it's based on debt to income ratio and all the little things that they say down there. I don't I hate that, Mike. I think it's deceptive. I
Absolutely.
really think that you got to really dive in, and I get people on your side of the fence, Mike, the realtors, who get angry with me because I won't give them a pre-approval just like that. They want a
Well, now see,
pre-approval.
I don't want the I mean, matter of fact, this week we had a cancellation on a contract from the buyers coming to us, one of our listings, canceled it. We're supposed to close on Tuesday next week. The mortgage company, you couldn't approve them. And here we were less than a week away from closing on that deal. But the realtor on the other side got a quick approval. And I don't like doing that. I like to make sure when I go to my lender, when we do this thing the right way, I'm saying, hey, we need this, this, and this. I don't need a piece of paper with somebody's signature on it that says, hey, look what I got. I need something that's going to stand up and say, listen, if I put an offer in, we're not bouncing away. We're good to go.
It's good now, and it's gonna be good 30 days from now when you're at the closing table. That's
Exactly.
that's the important thing, and if they're not doing that, then again, I mean, and there are a couple of mortgage companies out there, I will not mention names, but they are notorious for approving you for a low rate and approving you for a big number, and then all of a sudden it becomes bait and switch. And okay, we can get this done, but the rate's gonna be this, and you're gonna have to come to the table with a whole bunch more down. I see it all the time. It makes me sad because there are people and there are companies out there that do that. I don't think there's enough scrutiny, Mike. I'm gonna do a little self plug. I don't think there's enough scrutiny by buyers today to shop for who they want as their mortgage person on their team.
No, I agree.
I mean, you're a realtor and so I want to see a house and you've got the lockbox key, so you're going to be the guy. And, oh, by the way, I've got a lender over here that you should talk to. That's how 80% of the loan transactions go when it comes to who's buying. The realtor is the one who initiates the relationship between the lender and the buyer.
Well, let's face it, there's a good reason for that as well, because if that might be their first home sale, their first home purchase. I don't want to deal with I had a lender that I had a closing on it. I didn't pick the lender. I had nothing to do with it. It just showed up with the package with the buyer. We got to closing table a day before the closing, and we were still wondering because we couldn't get a hold of them. They were like they weren't sure. Then they all of a sudden at 10 o'clock at night we get they were out of California. We get a clear to close with conditions. We were supposed to close the next morning at 10 a.m.
Yeah.
Then they didn't come into the office until 10 o'clock their time. So yeah, it was. So I want to be a little bit more in control of my lenders. With my lenders, ships matter. I know that I'm going to work with a lender that's going to, hey, be honest, get me the numbers that matter. Blow smoke up everybody. We want to be able to. The bottom line is, what's our bottom line? We want to get the deal done. We want
Yeah.
to get from point A to the closing table, and then from that point, after we do that, then all the joy happens. We get to talk. We get to do all the other things we do. But I need a lender, mortgage professional that works as a team as a whole, so we can get through the package.
There's
I
a
want
big
my
difference.
buyers to.
There's a big difference between you as a real estate person and a rookie
Oh yeah,
as a real estate. And it doesn't even have to be a rookie, Mike. I mean, think about it. In 2024, all of the real estate deals were done by 30% of realtors.
oh yeah.
70% of realtors in 2024 did 0 transactions,
Well,
which
the other
tells me
question
that
is
there's a lot of
how many mortgage people left the industry in 2024?
had to. Yeah, had to.
So
Same
we
thing.
got a lot we got a lot of changeover. We got a lot of people not doing their job. So yeah, we have to, and so that's where I consider myself on the front line. I'm working with the people, trying to find the mortgage people that I know are going to get the work done because I can't afford to be in the middle of a deal. All of a sudden, Johnny disappears because he had to he had to go deliver Domino's pizzas. So yeah, that's
Okay.
kind of what we're doing, and that's why I want to be here and build a team of experts around me. I'm only as good as the people I work with, and that's really where I come from. And I learned that from my mom. I learned that in everything I do.
And I think that's correct. That's why I like working with you, number one. But the other side of the coin is, in my world, I want somebody maybe you're dealing with a divorce that you're having to deal with. I got a divorce attorney on speed dial. I've got a CPA in 15 different states on speed dial. You have to surround the customer with an entire team.
Absolutely.
Because if you're not doing that, if you're not referring business to reputable people, that's where all the horror stories come from in our industry. Period.
Absolutely. No, that's exactly right. And that leads us into a lot of the other issues that happen in our industry. That's why people are leaving. People are coming. I mean, we're expecting a decrease in realtors. I mean, about 250,000 realtors dropping this year coming up, which, I mean, that's a big number. But there were also the number I heard out of NAR came out that they're expecting a 14% increase in the amount of homes sold next year. We got fewer realtors and more homes sold. That's good for those of us who are sticking around.
Yeah.
And I'd like to talk about it going into this here in Florida. So I don't work everybody else. I mean, you cover what, 9 states?
17.
Sorry.
43 when it comes to investor loans,
Okay.
but I am licensed in 17.
Awesome. Here in Florida, everybody in the country, there's a lot of states in this country right now. Their people are bundled up. Hopefully they're drinking a cup of hot cocoa while they're listening to us. But they're cold. I mean, we're 70 degrees down here in Florida. It's wintertime. This is our busy time. We got everybody coming to Florida. So we have to market our homes to the people as they're coming down to vacation to plan on their trips here. We got it. What can you do going as we get into 2026? And how can we help guide people as they're here in Florida, looking at homes? What's the steps they need to take? We're here. We found a house. We got a great realtor. Now what do we do? What's the
next
recommendation?
important thing? The next important thing you have to have down here. Florida has its own unique set of problems. You better have a damn good insurance agent on retainer.
Amen. Amen.
Because in Florida, that insurance stops deals in Florida. Like nowhere else in the country, insurance stops deals down here. And I know, and I've got, we had the 2 hurricanes in 7 weeks in 24, and I know, my house got hit, 3.
3.
Okay, so I only remember the 2 that messed up my house. So
yeah, we had 3.
So, but I'm honest to goodness, it's like I think that people need to understand. First of all, do your home. If you're a buyer, Do your homework. Do your homework. I mean, know what it is exactly, or find somebody that can help you with that. I think too many people just, well, she's cute. Let's see if we can. We'll let her. I'm sorry, but it is. It happens, Mike. It
I'm not
happens
pretty
a
enough.
lot. You're not pretty enough, and neither am I. But what we have that they don't is a lot of knowledge. So sometimes you're going to have to sacrifice beauty for brains in some cases. That's what I'm going with anyway. But yeah, I think you have to surround yourself. You have to pick your team early. Pick your team early and interview. I think too many people settle on one mortgage professional or one real estate agent without talking to several.
Right.
I think it's kind of like a job interview. What can you do? What do you do differently? What is it that you do in the marketplace that is going to benefit me?
Absolutely.
It should be like a job interview.
Well, when I go to a listing appointment, it is an interview. I mean, I went to a listing appointment week or 10 days ago. There were seven. They were interviewing seven agents. Cool
But
thing about it,
I know you in this situation, and I promise you, you weren't the one that came in and said, "I'm going to get you more money for your house than anybody else did."
I told them
You're
not
not
to
that
list
guy.
it.
You're not that guy, Bake.
I
But
told them
there's a
not to
lot of
list
them
it.
out there.
I said, don't list it. I said, it's not timing is bad. I told him, I said, wait. I said, if you could rent it out till the spring. Get it. Don't try to sell now. You're not going to get the number that you want right now. And they didn't go with me, but I believe they took my advice because it's still not listed. So I may not be out of that picture on that one yet, but yeah, I'm not in this to, as I'd like to tell people, when I go to a listing appointment, my job is not to just collect listings. Now, I like having listings because those sell, but I don't want to sit with listings just to sit there. I want listings to sell. I want the properties to come in, and that's what we market. We market, our marketing philosophy is Florida's a destination point. I've got people from the Northeast, the Midwest, all across the country, overseas, coming here. That's where we're marketing because I'm not necessarily everybody's going to be buying the house from somebody across the street. They don't need me for that. So that's where our marketing, and that's how we spend our time and our dollars advertising. I don't want to keep you too long, and I appreciate your time. I want to talk a little bit about investors. How can you help an investor, especially down here in our market? Our market's kind of strange. We were a great investors market. It seems like we've kind of plateaued there. What can you do to help somebody who wants to become an investor for rental properties? Is there anything they should know to be able to get a leg up? Because it seems like I get a phone call about once every 60 days from a group of people that just went to a class that says, "Hey, I could buy a house with no money down." Tell me there's a better way than having to go through a class that tells you can buy buy a house with no money down.
So I don't like no money down deals because usually the person that gets hurt in that deal is the investor, quite frankly. There are programs out there, Mike. Here's the shift. Over the past few years with investors, and by the way, let me preface this by saying I'm more encouraged by Florida as an investment market right now than I am a purchase market
Okay,
right now.
good to hear.
I think that there's a lot of investment that could come back that it has kind of plateaued. But you also try to teach people how to be opportunity buyers. And there is opportunity in Florida right now for an investor. Okay. So that being said, used to be there's only two ways you were going to buy an investment property: cash or get a loan that was just the same as everybody else. You got to qualify using your credit score, your income, everything mattered. Your debt to income, everything. The rise of the DSCR loan has changed a lot of things as long as the investor understands the power within that type of loan. So DSCR stands for debt service coverage ratio, which if I take that from a foreign language into English, it means if you can rent the property for more than what you are purchasing the property for and your monthly payment in that mortgage, you win. Okay. Not only is that, but you don't have to use any personal income or any personal bank statements to qualify for that loan. It is simply based on the property. If the rental factor is higher than the mortgage factor, you're going to qualify for this loan. Now, the bad side to that is that you're going to pay 20, and in some cases, lenders are going to want 25% down. But that keeps you in a good cash flow position by doing that. And if you're a person who's already paying cash for homes as it is, this is a perfect scenario for them because why spend cash on a home and spend all of your cash purchasing it when you only have to put down 20 to 25% to make it work. Because as long as you're making more, you're not gonna make the big hit. You're not gonna make if your rental factor is 2,200 and you're paying cash for, okay, you're making $2,200 a month. I get that. But now you're cash poor. You can't get anything else. You can't scale that type of scenario. But with a DSCR loan, it helps you to scale. And everybody says debt is bad. I'm not a Dave Ramsey freak. There is such a thing as good debt. And if that good debt turns into cash flow for you, then you should utilize that. And I just think I talk to real estate buyers every day that don't even know. A DSCR loan's probably been around for 2 or 3 years. And they still don't know what it is. I'll bet 7 out of 10 people that I say DSCR, I'm speaking in a different language. They don't understand.
They got lost. It goes over their head.
Yeah. So, but it is literally the greatest tool. The DSCR loan is going to lead to the greatest tool in developing wealth that we will ever have, because real estate is the greatest wealth developer, I believe, that we have at our disposal right now. Okay, I just want to be prepared. So how do you get prepared for that? And that's simply pay attention to your finances.
Look at our current marketplace here, the investment income producing properties in our market, just with Sarasota, Manatee, and Hillsborough counties, just the 3 counties. We've got right now currently about 400 properties available, ranging anywhere from a cost of $90,000 up to almost $5 million. So you've got a choice. So there's a lot of different offers. Some of those are multi-unit locations. And so, yeah, when you're looking for an investor, hey, investors, give us a call. Scott and I will take great care of you. I promise.
Yep.
We in Florida, we do have a lot of properties that we can work with, and don't worry about it. We'll take good care of you. And I know when it comes to it, if you need financing, Scott's definitely the guy to take care of you. So that's good. So a couple things I want to run into before we get out of here. We call this the Living the Florida Lifestyle podcast because we love the Florida winters. We love the Florida springs. We get spring training down here. The weather's awesome. I mean, why would people come to Florida besides, all the negativity? We got negative insurance. We got interest rates that are where we got hurricanes. Give me a reason for somebody from Indianapolis that wants to come down to Florida.
Other than the fact that I don't like being cold,
Works for me.
6 inches of snow and single digit temperatures coming up next week, and I won't be looking at it.
See, that's why I have you on here.
Well, I just like the down here is different. My place is over just north of Orlando where I'm at today. And I don't feel there's the pressures of being in my own environment. It's amazing how vitamin D kind of changes those pressures. When it's cloudy and gray for 10 days in a row and misting and snows, it's miserable. It's terrible.
Well, remember, I am a Florida native. I understand that.
You only know of it from a distance.
When I say how great it is down here, people go, well, what do you know differently? I don't. I did go to college in the north, but you know what? I ran from it because I didn't really want to be up there during that period. So I was a summer guy. When I was up north, I was up there in the summer times because that's when they play baseball. So it was worthwhile.
I used to not understand the term snowbird and why people did it until I became it. And I don't get to do it for very long. Like this year, it's only 3 weeks, but trust me, I want to be here as much as I can. Now, flip side to that, Mike, sorry, but I don't want to be here in July and August. I just don't.
Where you are, I agree. But over here on the coast, we get a breeze, so it's okay.
Yeah.
So
but
going into, here we are. Like I said before, we're at the end of the year. I've got a crystal ball in the corner. It's got a crack in it. It's had the same crack since 1991, so it's useless to me. I've heard a lot of people talk about what's going to happen next year. From the mortgage side, what's your gut say we're going to happen for us going into 2026? What can we expect? Mortgage rates, housing.
I think interest rates are going to stay pretty level. We might get into the high fives, but I wouldn't count on it. I think we're going to be in the low sixes. I think 6.2 to 6.4 is going to be a pretty normal interest rate. But compared to where we were a year ago, we were up over 7. At least it's not going backwards. So I think that's a good sign. I think we've hit the perfect storm for 26. Quite frankly, I think people are starting to understand that Their house isn't worth as much as they think it is. So pricing is going to come down. I think you're going to see it. I think that the rates are going to be such that you're going to be able to afford it and do that. And I think there's the biggest fear that I see in home buyers today, Mike, is the fact that they're afraid to make the decision. They're afraid to make the leap. And they'll sit on where they are and not understanding that they're actually, if you're going to do it 2 or 3 years from now, probably ought to do it now, because the money you will save on just purely on your side of the fence, the money that buyer will save and not having to pick up the appreciation of the home of what it's going to do over the next 2 to 3 years, I think will more than offset what they would have to deal with me on the mortgage side. I just think it's a great time now to buy. I think we haven't been in that market for a couple of years. I think there's been a lot of people sitting on their thumbs waiting. I think the wait should be over. I think it's time now.
My personal opinion is I don't think we'll see what I keep hearing on social media is can't wait for the crash. I don't think we'll see a housing crash. I don't think the market's going to collapse. We have too many people with equity in their homes. We have too many people sitting there. We have too much new construction going on. I think we're going to be okay. Are we at the bottom? I think we're real close to it. I think we've bounced. I think we're in a good spot. So that's my come through with the marketplace. I mean, I talk to people all the time. So, but hey,
I think if you're going to buy, now's the time. Now's the time to make a move. Honestly,
I don't think it's a bad time at all. No.
Nope.
So, Scott, before we wrap up, I want to leave everyone listening with a couple of clear takeaways. And like I said, there's a lot of noise out there about rates, timing, and what people should do next. So let's simplify it. For someone thinking about buying or investing in 2025, what's the single most important thing they need to understand about rates, timing? Go ahead. Give me a good synopsis of what you think we need to do now.
well, so I think number one, they have to acknowledge and understand the fact of where the rates are right now and have a realistic thought process of what the rates are going to be, and not think too many people wait thinking the rate's going to go down. And I think there's a lot of misinformation in the media that kind of leads to that. And I think we tend to be sheep sometimes when we're just listening to talking heads talk about what it is. I watch all of the I watch all of the things that happen in the marketplace, and I go, there's nothing that tells me that that's going to happen. There's nothing that tells me. I think people need to be. I think people need to understand. A, get your finances in order. That's the biggest thing for me right now. Sit down with somebody who can give you some tips and give you some idea. You don't understand what the difference is between a 620 FICO and a 660. You don't know what the difference is between a 660 and a 720. It matters. You're thinking it's not very much, but you're wrong. It matters. So that matters. Always staying on top of your finances is important. Taking action to make that happen is important.
It's amazing how quickly that number comes down as opposed to how slow it takes to go back
Oh,
up.
100%. Yeah, it'll crash in a hurry, but it will take months to get it back to where you need it to be. So if you're thinking about buying a home in the next 3 to 5 years, you should start thinking about that part right now, period. You should prepare yourself for being ready for it. Too many people don't. I think surrounding yourself with professionals. I mean, this is kind of a recap of what we've already spoken about, but I think you got to find the right person. The right person in real estate, like you, is somebody that I could go to and say, Mike, I'm going to buy a home, probably going to be in the next 3 years. I don't want you to push me on it. I'll know when the time is right. I'll know what it is. What I need you to do is, when a great opportunity presents itself, bring that to me and and then let's see where we are. So I think it's important to find the right person to work with. I think too many people find the wrong person to work with. That's a big problem, both with mortgages, with the mortgage part, and with the buying part and the shopping for the house. I just think you can't do enough research. I think you have to do research. I think you have research, and then research more. And then ask somebody who knows, because you're going to have questions. Be an educated buyer going into the process. That way, not only do you understand next moves, but you understand that you know how to protect yourself in situations the way things change. So for me, that's the biggest two things, Mike, is to your credit make sure that it's right, but then surround yourself with the right people so that when it is time to make the move, that person can guide you in the direction that you need to go and make it a smooth transition for you.
Absolutely. So basically recapping, hey, don't wait for a perfect rate. Make sure you find the property that works for you. Manage your financing. Be prepared. Definitely preparation beats timing every single time. And then I like to throw in, remember, Florida continues to offer long-term lifestyle investment advantages that every market just can't compete against. So, Scott, what's the best advice and how does somebody get in contact with you? I'm going to put you all your contact information below, but hey, tell me a little bit about more about what you do, what's Hall of Fame Mortgage, how to get started, and let's go forward and move forward.
I think the great thing about us, Mike, is that I've got a great team surrounding me. I think that's the most, I don't try to do it all. I find that if I try to do it all, I'm going to mess things up. So if you go with what you're strong at and then you hire to the needs. And I think I've done a pretty good job with that. I've got really good processing team. I've got a great team behind it that cleans up my messes, and I do make them. I make mistakes. I mean, we all do. But it's simply because I talk to so many people a day. So if I don't have somebody to manage that part of it for me, then things fall through the cracks. So I don't do that. I tell them from the get go, you're going to want to talk to Matt, my director of operations. Matt will have everything under control for you. People like to talk to me, but they don't need to talk to me while they're doing all the things they need to do. I'm the good news guy. Okay. But I got a team that helps push things through the funnel. It's important. I think we do a variety of loans. I don't think we're just an FHA or a VA or a USDA person. I love investor loans. It's a good 50-50 split in my business. I like working with investors. In fact, it's what made me I'm starting to become one because I got tired of making everybody else money and I wasn't making money for me. So I figured out that maybe I ought to be thinking about practicing what I preach to do this. But there is a loan for everybody. If you're self-employed, sometimes self-employment causes a hassle when it comes to buying a home because you don't have a steady every 2 weeks paycheck sometimes as a business owner. I do commercial. I think our shop is well-rounded and we do a lot of different things. And there isn't anybody that walks in the door that I can't help. That's the important part for me.
And for anybody else listening, if you're thinking about buying, selling, or investing here in Florida, especially as we head into our winter season and into 2026, our team, the Baker Global team, would love to help you with our facts, our data, clear plans, and bottom line is going to help you reach your dream. So I want to say thank you, Scott, so much from the bottom of my heart for jumping on today. I kept you a little bit longer than I wanted to, but I thought the conversation was wonderful. I thought we got a lot of stuff out. And once again, thank you so much. And everybody, put a comment down. Tell me where you're listening. Tell us what's going on, and we'll catch you next time. I appreciate it. This is Florida Living the Florida Lifestyle. I'm once again Michael Baker with the Remax and the Baker Global team. I've had Scott Taylor with Hall of Fame Mortgage with us, and this is a wonderful day. Happy holidays. Merry Christmas, everybody.